Good evening. This is the Elliott Wave Daily Update for the S&P 500 and the NASDAQ 100 for Wednesday, July 31st, 2024. So markets kind of started overnight and just putting in place at yesterday's aftermarket close at, let's see, I'll give you that exact number. That low was 54.33. And that is actually the point where I am marking the subminuet fifth wave, the minuet fifth wave, and the minute wave A. Now, that suggests that all of this was the beginning stages of the counter trend rally, which will get labeled wave B of the minor fourth wave. And it has already popped above the 50% resistance level. Now, normally, because I am counting this as 5 waves down, it's pretty ugly. So I've been really just kind of sitting here toying with, well, what else could it be? Which it kind of could be 1, 2, 3, 4, 5 down to here. And then we get this crazy 3 up and then another 5 down. So it again, it's not the look and feel of it. Let me start by that. The look and feel of it just doesn't necessarily sit perfectly with me. And I'm not really sure outside of this, other than the following. So if I count it as a 5 and I count that as minute wave A, then this is minute wave B. If I take a step back and go, okay, what are the chances of it being an ABC down? Again, not real pretty, not real feel, and the look and feel don't sit right. But it would suggest that the minor fourth wave is done. Now, I'm not sitting with that one either. But as I always attempt to do, is that if I'm going to present what I call my preferred count, I want to have an alternate. I want to have something behind me that says, well, if this is not going to form what we think it should, and we break levels that it shouldn't, then what's your alternate moving in? And to be honest with you, that's the only one that I really can come up with. Now, again, in a quiet moment, again, if I'm just kind of looking and I'm going back and making reference to different areas, I'm sure that I may proceed down a different path. But right now, I am sticking with my minor fourth wave. And the reason is because when I take it out and I look at it, even on a 4-hour chart, it's still this bounce. To me, it fits not necessarily in Elliott and not necessarily on a fib basis. I'll tell you how it fits, how they went about it, how they did it. And it goes against what I've been talking about in terms of the money flows, the options flows, and just how things kind of been moved around and shoved. And when we start breaking important levels like a volatility trigger, call, or a put wall, we start breaking, the market starts breaking down or breaking up and gets above levels that should contain things, well, then kind of what I could say is all hell breaks loose, sort of. And what I mean by that is that what we got going on is that the market itself is now dropping into what you could call a red zone, like a red danger zone. And when it rallies back up over a certain level, well, then that kind of produces the yellow zone. Well, today in the S&P, it several times, it was, well, it was just really very, very interesting. And I want to just take this over, and I want to look at some things that actually are provided to us by Spot Gamma. And it's like coming in this morning. So again, today's rally changes a lot of that makeup. But we can see, and I'm going to use the ES, right? We normally would go when we're looking at the SPX, but now I've got all the same numbers for the ES. And I want to just look at it. And we had some volatility trigger this morning, right? The volatility trigger was at 55.32. Well, 55.32 broke overnight. So in essence, if I go over and I look at the SPX and I open it up, I don't need the 4-hour chart. Let's bring it down to the hourly chart and we look at, again, a gap. Remember that gap? What did it do? It gapped and it fell through a volatility trigger and a put wall. Sliced right through it. So that no choice. You must adjust. And adjust it did. And we ended up down 2%. Well, what happened here? So if I go over and look at the SPX, where was the volatility trigger? 54.95. We gapped up to it and through it. So that already starts to put things really under pressure. And then we had large gamma positions at 5,500. Well, we got up, we came back down, but we never broke back below 5,500. So we triggered it. They started to follow through. They came down, but then nope, follow through, serious follow through, pullback. Now, on this chart, I haven't filled it in, but I did put the 5 in the A. And I think I'm likely will keep it there because this is kind of different. This I almost can go A, B, or just A, B, C, B. I know we're doing a C wave, but it could be the whole B. So again, I'm looking at this as many ways as I can. This might be even clearer, and we still have some upside to do. But again, leaving the A here, which in the futures market, it's over here. But it didn't make an additional low here. It didn't go below that one. Didn't go below that one. So could it be a failure? Yes, it could. And therefore it's A, B, C, or just, oh, wait a minute. I see it gets to be difficult. How do you want to count this? Because on one hand, just in this market, you kind of have to go with A, B, C, and then it comes down. So it's just very, very difficult to pinpoint on an Elliott wave basis. But if I group it together, I kind of can put in, this is the A, this is the B, right? And now we're in a C wave up of the larger B wave. Bringing it back over. Now, again, just kind of talking what was in here. So we gapped up to the volatility trigger. Puts everybody on high alert. Then they start to break it above 5,500. That puts people into action because that wall of resistance that's at a 5,500 got penetrated, came back down, but did not break below 5,500. So they came back in with a vengeance after that and really started to just adjust and start what they were doing. Now, what do we have going up? Via the SPX, we have 5,550 as should be strong resistance. We got up to it, poked our nose above it twice, and then it dropped. So we're closing down. Let's go back over and look at the ES, which gets the benefit of continuing to trade, right? So what are we dealing with today? Well, we're dealing with that the Fed left rates unchanged. Okay, so they're not going to get too upset with that, even though they were guaranteeing themselves. And I think if the misinformed traders made it, because the Fed's always said that they might start in September, not the end of July, not the end of August, September. So taking that literally means, well, that's what they're looking at. So no change is not a great surprise. Now, let's talk these numbers here. So once again, in in the ES, as it stands right now, the call wall, way up here, way up there at 57.87. Pretty safe, right? So we think as the S&P puts in a 2% rally. If 100 points down was 2% move, or they just made another 2% move, literally almost back to back, right? This was last week. This is today. So basically, pretty much almost a week apart. 2% down, 2% up. It keeps itself very interesting. I do not think that this is a bullish, bearish scenario. I really do believe it's money flow, it's option flow, it's all of those numbers. And the reason, folks, is because they're trading them. It's how things are trading. It's how these numbers present themselves. And when they're broken, what option traders, other traders are forced to do. So is it a bullish or a bearish type of a move? I suppose you could tag it that way, but the reality is it's numbers. It's numbers. And when they break, you do what you need to do to your position. Now, as an ex-market maker, I do remember when things would break one way or the other, and my position wasn't positioned to take advantage of that, then I did a mad dash scramble. Why? Because my deltas would get out of whack. My gamma would get out of whack and would force me to do it. If I didn't, and I was leaning short and the market just was ticking up and up and up and up and up, I am getting shorter. So I'm losing a bundle as the market were to tick up. And if it gaps, you either react or you die. Kind of that scenario. So again, these upper levels, what's next here? We have 55.87. I want to show you. We got up to 55.88. At 55.87 in the ES is another large gamma. Now, spot gamma kind of, they rank these 1 to 5. 5 being the not so effective, 1 being very, that's an important level. This is 3, so it's right in the middle. But at 55.37 was 2. And right below that was a volatility trigger. So you had the volatility trigger go, then you had one level go, and then you had the third level get challenged. It held. So it's going to be interesting to, if that level remains as strong at that level, or does it shift? But it held. But a break, so this is kind of my thought on how I'm putting this all together and what it's producing on an Elliott basis. I feel that we did put in our low for minute wave A of minor wave 4, puts us in minute wave B of minor wave 4. I have my fibs, and it's coming up. And what becomes more difficult when I look at it, breaking it down to a 15-minute chart, is like, well, what is it? It's straight up. And I suppose I could break it down even more, and I can go 1, 2, 1, 2, 3, 4, 5, a 3, 4, 5 of A. I doubt that that's a B wave. So are we counting 5 waves up to here? Likely. Likely. I can bring this down. Let's just throw it to a close basis and see what we got. Here we got this. 1, 2, 3, 4, 5. So when in doubt, flip the chart from a bar chart or from a candlestick chart. Take a look at the close. The line chart is the close. So it's where it all, during these minutes or hours, where things closed. So makes a lot more sense. Very, very, very powerful third wave. Why? Well, because we're doing that dispersion trade. What are we doing? We're selling hand over fist. the VIX and taken that money. These are a lot of the large traders, a lot of different people. They take that money and they put it into the volatility within the components of the S&P 500, of the NASDAQ 100. And if we really look at it, of the Mag 7, we're continuing to just build up artificial intelligence. But the thing is like they keep coming in, they get smashed, and they buy it right back. Now, I'm not sure how long they want to do that, because I think that they're going to get forced, because they've also, right now, mind you, the volatility trigger, also what it really kind of helps out, and that 5,500 level, a break above 5,500, risk off, not risk on, risk off. We're going up, we're just going to go up, we're just going to go up. And so they're taking all the risk off. And then we start to see, again, we can start to look at other charts, and we can start to put together and go like, well, the last time we did a nosedive, here, and here, we saw a big change where the puts started to get put in place. But below certain levels, suddenly there was nothing. So they're like, okay, what happens below that? It falls apart. So we still can have different levels in our market that would produce big flashing red lights, like, oh my God, get out of the way, should this break. That happened today on that break, first of all, the volatility trigger, which did not fail. Last time it got triggered in the S&P, it failed. And we got this. This time it didn't fail, and we got this. So that's why I'm going to continue to use them. That it really does provide some guide. But as I've been talking about, guys, this is going to be information that, updated information, gets placed in the trade room, because that's really where it helps. It helps how you trade. And if you're a day trader, great. If you're a swing trader, perfect. If you're a position trader, helps you change that position if you have the wrong one on. Or just pick up some calls so you're not getting slaughtered. Now, there's a lot of different things that one can do to make adjustments to an ongoing position. So that all said, I am going to be looking for this. Now, if I've done 5 up, then what it is wave A of B. Back to the hourly. Wave A of B. So what do we now look for? Let me put it back to the other one so I can get my fibs correctly. Okay, because now I want to look for a B wave, but they're still kind of thinking they got to keep pushing this up, and they might. You know, this thing doesn't close for another 20 minutes, and believe it or not, it's valid, even though it's after the close. All right, so here I am now. So I need to kind of put these in a little bit of a different color, and I will show you the one I'm going to use. It's going to be the minuet, because what we're forming inside this minute B wave is an ABC of minuet degree. So that is, I'm going to take that one off, and I'm going to go here, is what I use, that kind of purplish color. Now, what can we expect from a B wave? Well, the same thing that we actually were just expecting from it on the way up. We'll look for it on the way back down. Now, again, because I can count this as 5 waves down, and I'm keeping it in line more or less with the NASDAQ, by the way, since it's the same stocks that are pushing it primarily. I'm kind of keeping it in line. Did 5 down, so we would not be looking for a flat, which is going to take it all the way up there. But if the alternate, which would suggest ABC down to here, then that could go all the way back up to there. Now, zigzag, because A is turned into 5 waves. So couple of ways I could take that too. I'm going to reserve judgment all of that because I'm going to say that it's an A wave. So what we're looking for is for the market to put in an A, right? Do we get an A, B, C down and end up somewhere in here? Maybe as low as 618. And then put in a C wave. And again, target's going to be 5607. Believe it or not, we're back at 5,600 in a day. We got up to 88 today. We're basically sitting just below 5,600 in a day. That is massive, a move of capital. And that's how I think I really should present the Elliott and the market. Not that the world's turned bullish. It's just a moving capital. It's money moving. It's flows happening all day long. Now, we've got the bond market deciding it's going to come to life. Hey, they didn't today, but they're good. That means they're definitely going to do it. They're definitely going to do it next time. So, market does what the market does. I'd like to approach it in the following manner. I don't care if it goes up or down. Sometimes I get sound a little bit aggravated because I'm like, oh God, market, what are you doing? Because now I gotta go figure out how does this fit into my current count. And at first look, I may not know because it's just strength. I'm just watching strength on top of strength, on top of strength, push and push and push, like the NASDAQ, which I'm going to get to in a minute. But once I kind of bring myself back down, sit back down in the chair, and I look at it, I'm like, okay, everything does fit. And knowing where these levels were helped me to realize, oh, we're going. When I saw them start to sell volatility, I'm like, oh, we're going, because they're putting on that trade. So I'm going to leave this as wave A of the minute B wave. So this is minuet wave A of minute wave B. I'm looking for that minute B wave. And we may have already gotten the A and the B, and we're just looking for a C wave down. Now you may think, oh, come on, Meta, their report that was great, blah, blah, blah. But they kind of ran it up real quick to 511 or 512, whatever the high was, and they brought it right back down. And they're still going to go, well, we got to buy it. We got to do this. This, to me, when I see this, is option market makers, option traders. They got to make adjustments. That was the close. We're 20 points above the close. You better adjust. And so, because they don't want to go home, whatever the deal is. So that's what I think. And we'll see what happens overnight. Because guess what? Tomorrow we got Apple. We got Apple and Amazon tomorrow. So again, one company does well. Like yesterday was AMD, which, by the way, if you did you notice AMD? It wasn't up $12, $15 anymore. It struggled to stay up $6. So they brought it all back down. But interesting, they didn't the other markets. The ones who are like, oh, AMD's like, so everything else has got to go. Why? Well, look at NVIDIA, and we're still buying it. Oh, skunk. Who cares about AMD? Let's go focus on NVIDIA. So again, it's what they all want to look at. It's all what they want to do. Does it have anything to do with truly, no. It's speculation. It's fear. It's adjusting positions. It's doing whatever they think they need to do to protect themselves, protect their positions. And that's what I think is a better way to look at the market than to go like, oh, are they bullish or bearish? To be honest with you, it keeps an open mind to when things get really going like it did today. So once again, to just kind of finish up with this one, if we look at moving averages, wow, did they all respond? We got the 20 crossing above the 200 again. That's fitting. That's going to help. Hopefully it comes back, if we get another little leg down in the B wave, the 20 will come back down. The 50 will go flat. The 200 will stay flat. Then we get up, we finish this B wave. And who knows if it is all done tomorrow? I don't have the inside look at Apple's earnings or Amazon's earnings. There are people who are going to speculate. Of course, they're already out there. All you're going to do is listen to CNBC or Bloomberg. They're speculating till the cows come home. Right now, I'm going to tell you right off the bat, I don't care. I don't care if the market goes up or down. What I care about is being able to catch the moves. So I want to, if it's going to be clean and it's going to run, excuse me, I want it to be clean, not jerking itself around, not going up, down, up, down, up, down. So you really can't keep a position because your risk kind of flips back and forth real quick. And so depending on the size of your account, or et cetera, it can be very, very, very difficult to trade when the market is getting real wild and squirrely. But there were some good opportunities today. There were a lot of good opportunities to really make some solid P&L in terms of the move itself. Where you can go in, you can go and you can get $300 or $400 or $500 in a future, and at least in the NASDAQ. So with this in mind, I'm going to leave this alone. There's our markers for the B of B, and then we'll get that C wave rally. And let's go over and take a look at the NASDAQ. Same deal. I left it just like that. I put that in. I said, just in case. That was the low, and we're going to run. And they ran. So I want to bring this down to the 15-minute chart, and let's take a look inside if I can do the same thing. And I can. Right? And it got really squirrely after Meta. That I thought, okay, great. Wave A. We come down, Meta. Boom. Okay, wave A. And then it's coming back down. Now, in the NASDAQ, we're just crossing 382. I'm much more comfortable with wave A crossing 382, maybe with follow through getting up to 50%, putting in a B wave, and then we come back up. What it suggests, again, we did 5 down. I'm not looking for, and this is more clean 5 down, by the way. I'm not looking for this B wave to be a flat. How it becomes a flat, if you're studying Elliott, wave A, this one, needs to be 3 waves. 5 waves produces zigzag, a zigzag. So I'm looking for the overall minor wave 4 to be a zigzag. Overall, I continue to feel pretty strongly because we've dropped into this box yesterday. On that slide, we dropped right into it. Very top side of it, but we dropped into it, and then we roared back out of it. I'm thinking that that's the B. We come down in a C, and we get closer down to there. Now, that's my thought. We shall see, right? Now, right now, what I need to put in is I got to put my fibs in here. So it's going to get a little crowded because I got a lot of fibs going on. And so let's see what we can put together and then separate them so we have an idea. Now, again, this is again putting into play because they're stepping back up to the plate right now and pushing this back up as we get close to the close. So again, the high is 6. Let me just take a look at that. 19,648. We're at 579. So I want them to just push and get above the that level. Okay. So with that in mind, let me go over here and let's do some. Again, I'm going to put this in the right color, 236 down there, 50, 382, 50, 618. I'm taking those off right now. and boom. Okay, so there we have it. Bring it down to the 15-minute chart so we can take a peek. So in essence, this didn't happen after the high. So it remains in place. 0.236, 19,438, 382, 19,302. Interesting. And then 50%, and this one goes out to the larger fourth wave. So actually, excuse me, the larger B wave, which has already gone through. Let me do us a favor. Go over here and take that off. 382, it basically is actually broken it, and so I'm going to take it off. So that leaves just the 50 and the 618 up there. So not to put confusion into the market, because those were related to the B wave as it came up. It surpassed those two. So I'm going to take them off. Now coming back down, 236, 382, we could get a deeper decline. We know they're possible. We watch them do it. So we have 19,302, 19,192, 19,081. So I'm definitively looking for the B wave to keep us above 19,000. I wouldn't be surprised, though, if they decide to just and kill it, nosedive it, and just drive it to the floor. And that could happen after tomorrow's Apple or Amazon. I mean, the path right now has been, I haven't seen one where they actually have seen, but if out of the Mag 7, seeing one that actually doesn't beat the street, doesn't beat the estimate. But they're not beating the estimate by a mile, by a greater percentage. But if you're like Meta, Mark Zuckerberg, smart man, who decided that the way that they reported it was, we're up 23% year over year. Bam, pay $5.15. And that's what the algorithms did. So it just really depends. If you're really smart and you know that it's a bunch of algorithms that are going to react to your news, and they're going to take the bites from the words that you choose to use. Earnings are up 23%. Bam. Next thing you know, this thing is way above 500. And literally, folks, that's what it did, because literally that was the first thing that Mark Zuckerberg said. And ran it up 23% year over year. Oh, bing, 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 came back down. Just gets interesting, but it stays on and in place. It's marker. Okay, so here, same deal. I've been looking for this to come back. And I will monitor it. And I'm hoping that it does it cleanly. B waves can be quick and done. And then we turn and do the other. So like this, quick and done. And then we just go right on with buying it. Quick and done. And we just walk right back and buy it. Slam it lower. That one's different because the earnings came out. But here, this was a pullback. And then they just stepped up to the plate and bought it. And took it above. Took it all the way above. All right. Tomorrow, on Thursday, let's go take a look and see what we have. Come on, give me my screen. It's over there. Okay. We have the for economic data tomorrow. Initial jobless claims, U.S. productivity. Those are both at 8:30 a.m. We have the S&P U.S. Manufacturing PMI at 9:45. We have the ISM Manufacturing PMI at 10 a.m. along with construction spending, also at 10 a.m. So we do have some market movers. And that also give us a reading on inflation. We got some inflationary stuff coming out. But you have to understand that Mr. Powell is pleased. Everything seems to be falling into place. But does anybody else notice that each time for the last 4 Fed meetings, he regurgitates the exact same words? A little bit of change up this time, but he starts it exactly the same. Exactly the same. If I was a reporter, it'd be like taking a nap. Anyway, so we have those numbers coming out tomorrow. They may, I would expect algorithms to move it, whether they hold or whether it holds direction. Could be some fun trades. Let's leave it that way. And the next Elliott wave update. Oh, and also tomorrow, don't forget, we got Apple and Amazon. Maybe some others as well, but the big ones, Apple and Amazon. Then we're out into later August. Okay. Next Elliott wave update will be on Thursday, August the 1st. We're way past halfway through the year, folks. It's amazing how fast it moves along. August the 1st. Have a great balance of the week, of your evening, and I'll catch up with everybody tomorrow.